trading, and I just want to show you what happened to Friday's trade, because I ended up not just taking one trade but two trades long on GBPUSD, because we identified a long trade on Friday by looking at the hour and 4-hour charts. You can look at that video on YouTube, and we established that we wanted to go long. So any sort of signal saying go long, we were going to take that. So a good signal to take in that time of the morning was this 67 a.m. range, which was at the top of that, the top here, the blue line, and the bottom of it was down here. So this was the 67 a.m. range. Wasn't quite the range of the entire evening. It was entire night, which is normally what we like to see. But so price went up quite nicely, taking advantage of the morning momentum. Then came back down to stop us out, because our stop loss was just below this level here, and it came down there and stopped us out. But if I go to the hourly chart, the 1-hour chart, this is where we entered on this bar there. This is the 67 a.m. range, this entire bar. Price broke it and went up, as you can see. It nearly got to the 600 level there, and then came back down to bounce almost to the pip of our previous channel high. So this blue line was the resistance of the previous channel, which held up for quite a number of days, and it also bounced off this 50 EMA, which it did there, and then it did here as well. So we were very certain that that it was still going to go up. So we took a trade in right here at 31. So if you can look there at the amount 31. So I'm just going to show you how I re-entered this trade to make back the pips that we just lost, because we lost pips on this one because we got stopped out, lost our 1%. So on here, I took a break of the pivot point. So price came down, then broke the pivot point, and once price closed above the pivot point, I waited for the next bar to take out the high of this bar. So I entered on 31, which is where the broker got us in, and then price went up very nicely, and came back down, touched on the 50 EMA and the 20 EMA, and then went back up. So we were looking for a break of this 600 level, which is where my mouse is now. And price did break it by about 11 pips actually, and but then came back down. But at this point, when it reached that, I moved my stop loss really tight to 81, to 145.81, and price came back down, stopped us out, but we still made a nice profit. We still made 50 pips on this trade. But so price didn't quite break out. It couldn't quite do it, and but this is quite typical. It never really closed above the level, and then price came back down quite significantly for the rest of the day. Now the Fitch downgraded the Spanish credit rating, and what this did is price really plunged. This is on Sunday night there, and also here at the end of the day you can see price really go down quite a lot, because it was unexpected, and the market didn't have it priced in that that Spain would get their debt downgraded on a Friday afternoon when both the UK and European markets were closed. So I mean, this is today, so there's a lot of wild price action today because it's a bank holiday in the US and the UK. But let me go back to yesterday. Sorry, I keep going backwards and forwards here. This is just a very good example to show you, if you've done your analysis, it doesn't necessarily mean that you're wrong when you get stopped out. You could well be right, just the timing was a bit wrong. We wanted to get in here, and we wanted to see that break upwards Price didn't like it. It couldn't quite get past the 600 level. Came back down, gave us a better re-entry point, much better, because we got in at 31, and before we got in at 69. So we got in a whole 30. I mean, what is that? 38 pips better entry. So we were in much better stead here for if it did break upwards, because it's just tried 1, 2, and then that was the third try with the higher low and MACD behind it. It didn't quite make it still, but it doesn't matter. We had a tight stop and we already had made a profit. The reason we decided to not just take profit at 600 was because price on the hourly looked ready to break that, and if we did catch that break, even if it's just the tail of that break, we could have made an extra 2% on this trade, so we would have made about 3%, even maybe 3.5% if price action allowed it. So that's the reason why we did it, is to catch those bigger moves. So if you have any questions, just drop me an email or put a comment on the video, and we can explain a little bit more about our trading strategies and how to catch these early trend moves, because GBPUSD is actually still in a downtrend, but we're taking counter trend trades because we want to catch that move back up. If it goes back down, that's fine. We'll just take it back down again. You can always copy our trades by getting our duplicator EA from experttrading.co.uk. You can go to our blog, which is experttradingfx.net, and read up about our trades. We literally take a screenshot of every trade and we show you how it's executed. And you can actually see this trade executed on there on the blog and when we explain it. But thank you for watching the video.